Yumela. This is classwork. I adapted it from a past paper, but I don't remember which past paper it was. And we will be dealing with financial statements. Let's start with 1.1, where you need to match the concept in column A with the description in column B. Write only the correct letter, that is A to H, in your answer book. Well, you can tell from there that I took this from one of the past papers. Now, what is your income statement? All I know is that income statement shows the performance of the company, where it deals with income earned and expenses incurred. So I will look at what I've got in column B. They said analysis of financial position of the business incorrect, remaining value of an asset after it has been fully depreciated incorrect, finance cost incorrect when classifying a transaction. The seriousness or impact on the profits must be considered incorrect. These principles make it possible to compare financial results of different businesses, shows the profitability of the business. Okay, for 1.1.1, I will actually go with F because the income statement only shows the profitability of the business. And then imputed expense, that will be depreciation. Income earned and expenses incurred must be shown for the same financial period. Well, that could go to the income statement, but because they said same financial period, that would actually be one of the gap principles, okay, which is the matching principle in this case. All right, gap will be E. All right, these are principles that make it possible to compare financial results of different businesses. And depreciation is an imputed expense. It's a non-cash expense. Basically, we just have to use estimates to calculate depreciation. Principle of materiality, it's about the value, and that's D. When classifying a transaction, the seriousness or impact on the profits must be considered. That will be materiality. Balance sheet, it's about the financial position. That will be A, analysis of the financial position of the business. And the matching principle will be H, as I've said. Income earned and expenses incurred must be shown in the same financial year. Interest is a financial cost or finance cost, which is C. Residual value is the value that remains after you have depreciated an asset. So it's the remaining value of an asset after it has been fully depreciated. That's it. That is all. Okay. I hope I'll remember all of those. I don't think I'll remember all of those. So I said 1.1 is F. All right, that's what we'll have. Let me just make sure that everything is correct there. So 1.1 will be F. Yes, I said that. 1.1.2 will be E. So it means gap principles will be these principles, correct? And 1.1.3 will be G. G says imputed expense, correct. 1.1.4, which is principle of materiality, will be D. And what do we have in D? Classifying a transaction, that is correct. Balance sheet will be A, is that correct? Balance sheet will be A, that is correct. And the matching principle will be H, that is correct. And 1.1.7, it says interest will be C, which is your finance cost, that is correct. 1.1.8 will be E, which is the remaining. So basically everything I've said is correct. Okay. I just needed to double check if everything is correct. That's it with respect to gap principles. Okay. Matching column A and B. We're done with it. Let's move on. And as I move on, I'll get to the trial balance. For the trial balance, I really can't do much with this, but one thing I know for sure that I can use will be my nominal accounts, where I have sales of 4,220,700. I will take that to the income statement. Cost of sales is 1,100,720. I'll put that in the income statement as such. and debtors allowances of 12,500. That 12,500, I will subtract it from my sales value. I would have sales, which is 4,220,700. Cost of sales, which is 1,100,720. From my sales, I will subtract that 12,500. Okay, let's move on. Still under nominal, what am I going to have? I've got salaries and wages, bad debts, rent expense, advertising, water and electricity, packing material, bank charges, and insurance. All of those will go under expense and operating expenses in the statement of profit or loss. And that will be it when it comes to everything that I had there. The next thing that I've got will be income. And well, there is, yeah, it is income. It is that interest on current account and interest on fixed deposit. Those two will be recorded in note number 1 and will be shown right at the bottom of your statement of profit or loss under interest income. So that 847 as well as interest on fixed deposit of 13,000 will be shown as your interest income. In total, that'll give us 13,847. I just totaled it off. I'm assuming that there is no adjustment. All right. So, I'm guessing there's no adjustment relating to interest income as well as interest on fixed deposit, interest on current account, and interest on fixed deposit. Now I can start going to my adjustments, all right? I hope that the grade 12s will be watching this as well. It says on the 28th of December 2018, T Chance data returned damaged goods. Now, immediately when they say returned damaged, returned, I know 4 accounts are affected. You debit debtors allowances, you credit debtors control at selling price, then you debit trading stock, and then you credit cost of sales at cost price. They gave us the selling price, which is 850, and the markup was 25% on cost price. These goods were immediately sent to the supplier who issued a credit note. No entries have been made. Now, you still do your form accounts, but you will need to adjust your trading stock. Because we debited trading stock, it means our trading stock went up, but at the same time, it'll go down because those goods will have to be returned to the creditor. So when they're returned to the creditor, we debit creditors control, then we credit trading stock. So when we debit the creditors control, it means our creditors control must decrease at cost price of goods returned. You got that? Good. Now let us record it quickly. When we record it, you will go to sales, and from sales, you minus the selling price of those goods because an increase in debtors allowances will reduce your sales. And at the same time, that 850, we need to use it to reduce our debtors control in trade and other receivables, which was 63,190. We need to reduce it by 850. I'm done with the 850. Now I need to find the cost price relating to that 850. I am going to take the 850 because they gave us the markup and they said the markup was 25%. I'm going to take that 850 times it by 100 and divide it by 125, and that will give me the cost price, which is 680. I need to subtract that from cost of sales And at the same time, after subtracting it from cost of sales, I need to adjust my trading stock by decreasing my trading stock by actually increasing my trading stock with that amount, which is 680. And I'm adding to my trading stock, but at the same time, I'm subtracting. So the minus is for when we returned that trading stock to the creditor. The plus is when we got it back from the debtor. Basically, the net effect there is 0. All right. Now that 680, as I've said, because that trading stock was returned to the creditor, I will need to go to trade and other payables. And from my trade and debtors, I need to subtract that 680 because we returned those goods to the creditor. Adjustment 1, done. All right. Adjustment 2 says that trading stock on hand as per the physical stock taking on the 28th of February 2019 amounted to 698,900. I'm going to take that and compare it to the balance of the trading stock I've just calculated, which is the 697,400. I'm going to compare that to the stock that was counted. You will notice that the stock that was counted is more than the stock that we have just adjusted by 1,500. So that 1,500 will be trading stock surplus. If your closing stock is, if the stock counted is greater than the stock that you adjusted as per the trial balance, then you will have a surplus. If it was less, we are going to have a deficit. It means that the amount that you have adjusted of 697,400, you need to adjust it up. So adjustment up is a surplus, and a trading stock surplus will be recorded under operating income. So under operating income, I will simply put that trading stock surplus. But before I even get to that trading stock surplus, I will calculate the total for sales and then calculate the total for cost of sales. Please note, this is for grade 11s and grade 12s. Cost of sales, always put them in brackets, because in accounting, brackets means we are subtracting. Make sure you put it in brackets, please. Cost of sales is an expense. We put it in brackets because we have to subtract it from sales. So to calculate your gross profit, you will take the 4,207,350 minus 1,100,040. Your gross profit amount will be 3,107,310. That's it. Then you're going to calculate your trading stock surplus, which is the 698,900 minus 697,400. Your trading stock surplus will be 1,500. I did explain why it is a surplus. Done with adjustment 2. Done with adjustment 1. Done with adjustment 2. Let us move to adjustment 3, which says that packing material to the value of 15,700 was used during the year. What must we do then? We need to go to our packing material. The fact that it was used, that is the expense. That is the expense we need to record packing material at in our statement of profit or loss, or i.e. the income statement. That is our actual expense. When you go to the income statement, that's what your packing material value must be. But to show it as part of workings, you will simply take the 16,070 for packing material minus what was unused. How do we get the unused? You will take the 16,070 minus the actual expense, which was what was used for packing material, which is at 15,700. It will give you the unused part. The unused part is the one that you subtract from your packing materials here. Are we together here, grade 10s to 12s? Does that make sense? So the used will be the one that you record as an expense, and that will be 15,700. Please do not memorize. Whatever you subtract here must be the one that was not used. Whatever you have in this column must be the used. That is your actual expense. The used one will be your actual expense. You good? Great. The unused, which is the 370,000, together with the stock that was counted, will be recorded in the inventory note. So trading stock will be the one that was counted. The consumable stores on hand will be the one that was not used. That will give you your inventory of 699,270, of which you will put in your statement of financial position under current assets. Right, you normally put it over here as your inventory. So you'll put it over there as I've indicated. All right, so you'll put it here. We'll come back to it though later on. Let us move on to the next one, the next adjustment. Am I done with adjustment 2? The answer is yes, I have done that. Let's move to adjustment 4, which says that the insolvent estate of ePayne paid out 40 cents in the rand and transferred 360 rand directly into the bank account of the business on the 5th of December 2018. This has been recorded. So the cash part, which is the 360, was recorded. The rest of the outstanding balance must be written off. And they talk about provision. We'll come back to provision. I'm just going to focus on the writing off part. So we know that this 40 is the 360 because the 360 is what was received and the 360 was recorded. We don't need to worry about that. Let us do the workings and see how we will record that. I've already done packing material. I'm going to move on to bad debts. And you need to pay attention here because everything we have done is very, very important. So that 360 is the 40 cents. We are missing the 60. So to get your bad debts, you will simply take, let me just do it on the face of my statement of profit or loss. For your bad debts, you will take that 360, which is the 40 cents. I need you to understand the 360 is the 40 cents. But I want bad debts. To get my bad debts, I know my bad debts is the 60 cents. So the principle applies. For me to calculate those bad debts, I will take the 360, which is the cash amount that was received, multiplied by 60, and divided by 40. And how much will that give me? It will give me 540. So that 540 is my bad debts. How do I record that? I will add that bad debts to my bad debts that I already recorded. To get my total bad debts from 2,790 to 3,330. I just increased that by 540. That 540 will also affect my debtors control. So I will go to trade and other receivables, and from trade and other receivables, subtract the 540. Done. Let's move on to the next transaction. It says provision for bad debts must be adjusted to. There you celebrate because it means you don't need to calculate provision for bad debts. The adjusted to is the final provision. So you will record that as provision for bad debts in trade and other receivables. I will just record it there because that is what you have calculated. The final one will be subtracted from trade and other receivables. And that's it. All I have to do is to take that amount and compare it to my provision for bad debts that I've got in the trial balance. And the provision for bad debts I've got in the trial balance is 3,450. So the one that is in the trial balance is more than the one that we calculated. So we need to bring it down to the one that we calculated because the one that you calculated is the accurate one. Now, when we bring down the provision that is in the trial balance, that is income. The difference will be income. You will write it here as provision for bad debts adjustment, and the amount will be 316. Done again. All right. We're done with that. Let's move on to the next one. A debtor with a credit balance. Note that a debtor cannot have a credit balance, all right, of 11,700 is transferred to the creditor's ledger. That means we owe that debtor. That debtor is actually not our debtor, is actually our liability. So what we need to do is to cancel that 11,700 in our debtor's control, okay? How do we cancel? Because it was a negative balance. We cannot have a negative debtor's control, guys. Because it was a negative balance, I'm going to add it back so that my balance is 0. Right? Once my balance is 0, I will just calculate my total trade debtors there and calculate my net trade debtors, which is 73,500 minus 3,090. I will get my net trade debtors at 70,410. That 1170, I'm adding it here so that it removes that negative so that it's 0. Okay, so between us and this debtor, we owe this debtor. They are not our debtor. So debtor must be 0 because they are not our debtor. Instead, they are our liability. So we are going to take that 11,700 and add it here. Okay. A debtor's control can have a negative balance. It means that the debtor must have overpaid us. And when the debtor overpays us, it changes that debtor from being a debtor to being a creditor. That is why we add in that 11,700 under creditor's control in trade and other payables. We good? You did? Easy, right? It looks very easy. It has. I hope you have done all adjustments. Please check out the podcast or playlist where I divided all adjustments. Check all those adjustments and check adjustments that relates to debtors where I discussed this in full. All right. I'm going to move on to the next adjustment. What does it say? What does the next adjustment say? It says that one employee was erroneously left out of the salaries general for February. February is the last month of our financial year. So erroneously means they were mistakenly left out. The details of his pay slip were as follows. So we are given the net salary. We're not given the gross salary here. For me to get, I would call it GS, all right? My gross salary will just be my net salary. I'll just call it NS, not for life science. Add all the deductions, all right? I would just say deductions. Add all the deductions, all right? And that will give me my gross salary. Let's see how much I will get here as the gross salary. And if you know, you know why I'm calculating gross salary, right? I'm going to take that 18,375 add 4,500 add 1,875 add 250. and I will get 25,000. So what do I do with this gross salary? Guys, gross salary is what we call our actual expense for employing this person, okay? So this 25,000, I will add it to salaries and wages in my statement of profit or loss. Right? That's the only thing I care about for now. And I will tell you about everything later on. So I'm going to take that gross salary, add it to salaries and wages, which is 25,000 rand, and then just leave it like that. Okay. Then read on, read on. I don't care about the deductions because that is deducted. That is the employee's responsibility. It is what the employee paid for. I, as the employer, have got nothing to do with it. I have no use for all these deductions. I can't record them anywhere. Obviously, it depends on whether we pay. The fact that these details are omitted, we will have to record them in trade and other payables, but I will explain that. All right. And they gave us the details of the salary slip. So this is what we're contributing. Note that what we're contributing will be an extra expense. On top of paying this person 25,000, we have to pay 10.5%. So it's an extra expense. I'm going to take the 25,000 multiplied by 10.5%. It'll give me pension fund extra, which is an extra cost for pension fund. And that pension fund amount, how much will it be? Let's see. Oh, I already have 25,000 there. So I'll just take that 25,000 times it by 10.5, shift percentage. All right. It'll give me pension will be 2625. So what am I going to do with that 2625? I will have to add it to employer's contribution. But here's what they're telling me. All contributions were debited to salaries and wages. So I can't have employer's contribution. That means I am going to add that to salaries and wages. Instead of having a separate account, which is employer's contribution, I'm going to take that 2625 and add it to there. All right. And that 2625, I will also take it to trade and other payables and add it there as my liability. Let me just quickly record the net salary, which is what I didn't record. The net salary will be recorded in trade and other payables as creditors for salaries. Net salary, which is that 18,375. You will add it to the already existing 48,000. So your creditors for salaries, this is what we owe our employee who was left out. And our net salary here will be 66,375. This is what we owe our employees. On top of that, I will add to my pension. My pension was 6,500. So where do I get the 6,500? It comes from my pre-adjustment trial balance under the financial positions section, i.e. the balance sheet section. It says my pension fund is 6,500. It'll be increased by what we contributed and what the employee contributed, which is what the employee contributed is referred to as a deduction. Therefore, the sum of those will give us what is owed to the pension fund, which will in this case be the 6,500 plus the 2,625 that we contributed plus the 1,875 that was subtracted from the employee's salary. In total here, our pension fund will be 11,000 rand. Done. Right? Let's move to the other contribution. What's the other contribution here? We've got UIF is rent for rent. So whatever we contributed as UIF, whatever the employee contributed as UIF, we are also going to contribute the same thing. I will look for SARS UIF or just UIF under financial position. So this is what I've got. So I'm going to increase that by 500, which is the 250 that was contributed by the employee as well as the 250 that we as the company contributed. That will increase the UIF, right? But before I get to the UIF, I'm noticing that between pension and UIF, I've got SARS pay as you earn, which is 12,000. I will start by recording that first in my trade and other payables. I will record SARS pay as you earn, which is what we owe to SARS in terms of taxes, and that'll be 12,000. But to this 12,000 rand, I am going to add the pay as you earn that was omitted from the salary details of the employee that was erroneously left out. I am going to increase that 12,000 by this 4,500 to determine the total pay as you earn we are owing to SARS, which will be 4,500. Added to the 12,000 in total, we owe SARS 16,500 with respect to pay as you earn. Right, then I'm going to have UIF. UIF will be that 1.5 that I spoke about, plus the 250 that was contributed by us and the 250 that was contributed by the employee. In total, UIF, which is SARS in this case, SARS UIF, we owe 2,000, right? Easy, right? Looks very easy. All right, let's move on. Please note that if you're in grade 11 or 12, you can watch this video, right? Grade 10s, yes, I'm doing this for you, but if you're in grade 11 and 12, please watch this video till the end because you will learn a lot of things that you probably forgot. And this will be in your exam. Oh, rent expense was increased by 10% on the 1st of February 2019. Rent for March 2019 has already been paid. Okay. For this one, I've already done workings on this, but sometimes I just want to do the workings here. Our financial year starts on the 1st of March. So I'll just say 1st of Mar. And it's 2018. So I'll just say 2018, right? It ends on the 28th of February. 28th of Feb. All right, obviously for me, it'll take time to write on this pad. It'll be 28th of Feb. What am I doing now? 28th of Feb, 2019. I'm laughing at myself because, yeah, my handwriting here is not making sure. Okay, that's what we're going to have. I'm going to change my, well, let me say I will change the color of this pen. And February, the 1st of Feb is here, right? So 1 Feb, what happened on the 1st of Feb? We actually increased our rent. So this will be 2019, okay? We actually increased our rent. So that date is key, right? And it'll continue up to, because they said we also received, or we also paid. So this is rent expense. We also paid rent until March. All right, so I'm going to have March there. Okay, what am I doing now there? What am I doing now there? All right, so just have March over there. So I have March. It'll be 2019. So rent for March 2019 was paid. That means this rent is already included in what we have paid as rent. It's already included in the rent expense. So rent for March is already in there. It's in that 63,360. And we need to take it out. Okay. And the problem is we can't just divide that by 13 because something happened during there. There was an increase, which destroys everything. So how much was rent from here? From March, rent was X. What comes after March is April. It means even in April, rent was X. It was X, 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 up until here, where it changes because it increased. So from there, rent will now be whatever rent it was, which is X. It will now be at an increased amount, which will be the percentage increase plus 100. The percentage increase plus 100. Basically, we are increasing X by 10%. So now X will be at 110% from the 1st of February. So basically, it was X for how long? March, April, May, June, July, August, September, October, November, December, January. I can't count Feb because it increased on the 1st of Feb. So it was X for 11 months. So if you add X for 11 months, it's the same as though you just multiplying it by 11. But after February, it was no longer X. For February and March, which is 2 months, it was no longer X, but it was 110% X. It was at 110% X. Okay, this will give us our rent expense, which was, I hope I will remember this, 63,000. No, I don't remember the next three numbers. Which is 63,000. I knew it. It is 63,360. 63,360. Okay. I prefer to do it this way because some people think that I'm getting these answers from somewhere else. Actually, I actually type all the answers, and yeah, I just prepare the memo myself. Obviously, at the end, I'll compare it to the memo that was, if I was doing a past paper, I'll compare it to the memo that was given with the past paper. So that's why if I say that I took this from a certain paper, when you compare this memo to the one that you have according to that paper, they'll be slightly different because we do things differently. This, they might have done it differently. I don't know how they will do it, but they might have done it differently. Guys, you know your math. Okay, when you multiply numbers with variables, you start by multiplying numbers first. So you take that 2 and multiply it by 110% and check how much that will give you. So I'll still have 11x here, but that 11x, I'm gonna add it with whatever I get over there, but it'll be that x, right? How do I calculate that? I will just go to my calculator and punch in 2 times 110%, which is this shift that equal sign. It'll give me 11 over 5. Change it from that, it will be 2.2. So I'm going to add this 11x to 2.2x. I will add it to 2.2x, all right? And this will still give me that 63,360. Oh my word, 63,360. And then when you add 11x with, you remember when you add integers, when you add terms, you keep the variable, which is x, but you just add the coefficients. So this 2.2, when I add it with 11, it gives me 11 plus 2 is 13. So it'll give me 13,2. So I have 13,2 is equals to 63,360. Okay, 63,360. Then divide both sides by 13,2. 13,2. Divide this side by 13,2. And divide that side as well by 13,2. Now let's check what we're going to get here. I will get x is equal to, all right? So note that x is before the increase. I need to remind you that it's before the increase. So whatever we get, x is the value before the increase. Back to my calculator. Let's see. 63,360. Divide that by 13,2. It gives me 4,800. So this is before the increase. And I really can't do much with this 4,800 because I'm looking for rent for March. And rent for March was in this 4,000. I'm looking for this rent here, okay? And for me to get that rent, I would have to take that 4,800, increase it by 10%. When you increase it by 10%, you will just multiply it by 110. So what are we going to get there? 4,800 times 110 times it by 110. Shift percentage. Don't forget the percentage. It gives me 5,280. So that is the rent for March. It will be 5,280. That is the rent for March. This 5,280, we do not want it. It's inside that 63,360. We do not want it. So I'm going to go to my rent. Note that this is not income because I know some of you have memorized it's income, it's income. No, this is rent expense. So I'm going to go to my rent expense and subtract that 5,200 and what? It's 5,200 and what? 280. And I'll get my rate, my total rent expense. But that 5,280, because we paid it in advance, it's a prepaid expense. And a prepaid expense is recorded in trade and other receivables. Before I can record it in trade and other receivables, I will first check if I've got any prepaid expense. I do not have any prepaid expense here. Even here, I don't have any prepaid expense. So if you have any prepaid expense, you are going to add it to that amount to get your total expense prepaid, okay? I don't know if you guys heard me when I explained this, which is your prepaid expense of 5,280. Note that we record it here in trade and other receivables because it's an asset we have prepaid. It was rent expense. If it was rent income, we were going to record it in trade and other payables as income received in advance. So I will just leave it there. And the next one will be depreciation, which is 83,200. That 83,200 depreciation, I'll record it as an expense and operating expenses as such. That's why I have the depreciation 83,200. But that 83,200, I will also have to take it to my tangible asset note, which is note number 3, and record it there as depreciation. They didn't give us depreciation for each individual asset. Therefore, I have to record that over here under the totals over there. Okay. And the amount will be 83,600. All right. So basically, that's what I was going to have, 83,200. But when I look at my pre-adjustment trial balance and the adjustment itself, they said nothing about a new vehicle being purchased. So basically, this is all I've got. So I'm just going to take what I have and work with what I've got. And what I have here are the balances at the beginning of the, well, this two will be at the end of the year, but those two will be at the beginning of the year because they did not include current year depreciation. If they included current year depreciation, then we're going to have depreciation here. All right. The fact that it's not there, it means this year's depreciation was not recorded. It was our first time recording it as we have done here. Now, if I was to go back, note that cost of equipment at the beginning of the year was 1 million, accumulated depreciation was 100,000, meaning that for equipment, we had 900,000 at the beginning of the year. We're missing a lot in between, so I can't really fill up the in between and the movements, I can't fill that up. So cost will still be that 1 million. At the end of the year, I don't know what my accumulated depreciation is. Same with my vehicles. I don't know what accumulated depreciation is at the end of the year, okay? For each of these assets, I do not know. They did not give us any information. For land and building, we had no land and building here. So if I was to calculate the total for the total cost at the beginning of the year will 3 million, total accumulated depreciation of all assets at the beginning of the year will be 600,000. Carrying value of all assets at the beginning of the year will be 2.4 million. And then our total movements will be that 83,200, which was the depreciation on all our assets. Our cost will still remain the same, but accumulated depreciation will have increased. Remember, accumulated depreciation will be balanced at the beginning of the year plus current year depreciation, which is 83,200. It'll give us accumulated depreciation at the end of the year, which will be 683,200, and that's it. Now take the 3 million and minus that 683,200, you will get carrying value at the end of the year. That 2,316,800, you will record it on the face of your financial position, i.e. the balance sheet, as your tangible or fixed assets, and you will put it there. All right. We'll come back to this. All right. I'll just move on. We'll come back to all of that. When I move on, where do I go? Now it takes me to the bank statement. All of this were reflected in the bank statement. We've got 315, which is interest on overdraft. I will stop right there. That will increase my interest expense. All right, so I will record it in note number 2 as interest on overdraft. I don't know what else to add to it. At the same time, because it's interest on overdraft, I will check where my bank balance or what my bank balance was. When I look at my bank balance, it's on the credit side. The fact that it's on the credit side, it means it's a bank overdraft. We are owing the bank. So when we adjust that, we'll have to adjust it on the face of our statement of financial position. We'll normally put it under current liabilities. Okay, we normally put it under current liabilities. And we start with that bank overdraft, which is note number 9. So you'll have bank overdraft here. And from that bank overdraft, you will increase. It increases whenever we take money out of the account. Interest on overdraft is it's basically adding to the overdraft. So it'll increase what we owe the bank. Remember, bank overdraft is what we owe the bank. Okay, we good? All right. That's that with the 315. Then we'll go to bank charges. Bank charges will increase our bank charges in our statement of profit or loss, which is an expense. Our expense bank charges will increase by that amount, which is 370. Okay, what did I miss here? Bank charges. It's 670. Yes, you will add it here to bank charges, which is 670. Our total bank charges will be 1,675 plus 670, and that will give us our total bank charges of 2,345. And then we've got S. Sibanyoni that was previously written off as a recoverable, which is 3,600. That's 3,600. I will include it under other income because it's bad debts recovered. Okay, so you will put it there under other income as bad debts recovered. It will be 3,600, and just calculate your total other operating income, which will be 1,500 plus 360 plus 3,600. Leave it there. And I forgot to tell you about the 670 that relates to bank charges. It'll also increase our bank overdraft, okay? Because it's basically, actually, it'll decrease our bank overdraft. Income, money coming in will reduce our bank overdraft. Now, bank overdraft, as I said, will actually be recorded under current liabilities, and it was 7,800. It will be increased by any money going out, which was on interest and bank charges, but it will decrease by money coming in, which will be that it was bad debts recovered of 3,600. And that's all. That's all. That's all. That's all, guys. That's all. Okay. And that's what you needed to do with all of that. Okay. What if they said that it was erroneously recorded in the CRJ under debtors control? Then there they're telling you that we actually reduced our debtors control. Then that would be wrong. So you will go back to your debtors control at the 3,600 because you can't reduce your debtors control. Because this data was previously written off, meaning that they don't exist in our books. They were not there. So it'll be incorrect for us to have reduced our debtors control by that 3,600. We're going to add it back and then calculate it as bad debts recovered. Okay, I think I gave it to my grade 12 at some point, and yeah. So I told them that the entries that were made were that they debited bank and credited debtors control. So the debiting of bank was correct, but the crediting of debtors control was incorrect. So you needed to reverse that by debiting debtors control, that is adding to debtors control, and crediting your bad debts recovered, which is income increases on the credit side. Gave it to them just for them to think about this, to exercise the brain muscle. We good? All right, let's move on. The next one talks about loan statement from Nedbank on the 28th of February 2019 reflects the following. So this is the balance at the beginning of the year, and when we have the payments. Please note that the fact that you have payments during the year, it means that whatever you have in the trial balance, they already deducted the payments. Okay, let me check what you have in the trial balance with respect to the loan. where's the loan here? Mortgage loan. Okay, this is incorrect here. It was not supposed to have been reflected that value. It was supposed to have been reflected at the value minus the payments. What are we going to do now? Basically, I'm going to go back to that and just check what I've got there. I have to erase everything here. They said interest must be capitalized, which is good. All right. Let me just erase everything here. Now you're going to have to do that calculation where you have the opening balance, which is that 600. Then you minus their payments, which will be 103, 200. And then you'll realize that interest is the missing part. I'll just call it I here. Interest is the missing part, which is X. And your closing balance will be 652,000. Now, to calculate that X, you just use the reverse operation principle. You add what you subtracted, you subtract what you added. So you will take this value here, add what you subtracted, and subtract what you added. It'll give you, so you'll subtract this over here, okay? It'll give you X, right? It'll give you X, right? And so what are we going to do there? You will have 652,000. Then you add 103,200. Then you subtract 665,600. Then it'll give you 89,600. 89,600 will be your interest, right? So you will normally debit your interest. Debiting your interest, which is your expense, it means that your interest expense, interest on loan, your interest expense goes up. You will add to that interest on overdraft by 89,600. And you will get your total interest here, which will be 89,915. But at the same time, that 89,600, you will increase your loan amount. You will basically increase your loan amount by that. Okay, so you'll notice that your loan amount will now go up by that amount. Your loan was sitting at 562,000, if I'm not mistaken. Now it will increase by that 89,600. So your long-term loan will increase by that 89,600, as I've said, and it'll give you a total amount of the loan, which will be 652,000. You just put it as a total there. Okay? You good? We good? All right, just the mark on that continuous accuracy mark, and that's it. We're done with interest. Guys, as I've said, if you struggle with any of these adjustments, please check on the podcast. Look for adjustments. I label them adjustment on interest, expense, adjustment on interest on loan, adjustment on depreciation, adjustment on salaries, adjustment on salaries and wages, adjustment on They are there on the podcast. Just check them out in case you're struggling to understand what's going on here. Now they say the following payments made to suppliers had not been processed by the bank by the 28th of February 2019. So meaning that these amounts did not go out of our bank account. And already the fact that they are payments, it means we already recorded them in cash payments journal. We reduced our bank by these amounts. So we need to correct it by going back to our bank and adding those amounts. Remember, they are coming in, we adding them. And when we add them, they reduce our bank overdraft. Okay. And what are these payments for? Let me just check what they were for. If they were for suppliers, to suppliers, it means that we are still owing, yes, to suppliers. It means that because they did not go through, these payments did not go through, you're going to go to trade and other payables and add that to your trade creditors. So basically to your trade creditors, you'll have to add all those amounts. You will start with, I started with accrued expense here, I don't know why, but you will start with those amounts in 2,580 and 1,800 and something. So you will add them to trade creditors because you're owing your creditors more. These payments did not go through, were not processed by the bank at the end of the financial year. So for this year, we still owe those suppliers, even though those payments may go through the following financial year. Basically, that's what I'm going to do. I'm going to add them to my trade creditors and probably get the total, which will be 212,450. And that's it. That's it about that transaction. Okay. You just have to think. That one is something that you can be taught. It's something that you have to think straight from your feet, right in the exam. And you need to know accounting, what the accounting process is. Okay, number 30 says that insurance amount includes an annual, I know it means 12 months of 24,900, which was paid on the 1st of November. So here I need my timeline again. Ah, man. All right, so I'll have can I just write it as M for now? 1 March, and it was 2018. So I'll just write 18 here. 1 March 2018. Here I'll just write 28th of Feb, but it'll be 2019, right? So basically this is when my financial year ends. But then during the financial year, we did something, right? What did we do in November? November is around here. Is it the first? Yes, I'll just write 1st of N 2018, the 1st of November 2018. We paid insurance there, which is for 12 months. 1st of November, it'll be until 30th of October, the following financial year. Okay, to 30th of October 2019. So I'll just write 19 there. All right. So this amount has been included in the insurance paid. So it was included in this insurance expense here. It is included in there. It is in there. So that 24,900 is in there. But the problem is there's nothing wrong with including it as our expense. But the problem is part of that 24 falls here. And that is outside our financial year. And any expense that falls outside our financial year is basically not an expense. We need to deduct it. So how many months fall outside the financial year here? It's March, April, May, June, July, August, September, October, which is 8 months. So I'm going to take that 24,900 times it by, let me count again, March, April, May, June, July, August, September, October. It's 8 out of 12. You need to read carefully because sometimes they'll say it's insurance for 8 months. So you'll find that for 8 months, only 5 fall outside the financial year. So it'll be 5 over 12. So 12 represents a year. If it's a total number of months in essence, that's the denominator. And the numerator, it is the total number of months that fall outside the financial year divided by the total number of months. So this is the total number of months that we pay the insurance for. Okay. So in this example, let's check. Okay. I wish guys, please subscribe and make sure you watch the videos. Support the channel so that I can write that writing pad and just add it to my laptop. I do have a laptop where I can write on the screen, but it's not nice. Even with the tablet, it's not nice. I just want to try the writing pad. I think the writing pad will be nicer. Okay, but beside that, I don't have a problem with typing. It's just that it takes longer. And in examples like this, you just have to make it a reality. I think when I'm writing things like this, it becomes a reality. You won't think that I took it from somewhere and just put it there. I have to go through this. I prepare slides. So it's not something that I just took from somewhere. These slides, you won't find them anywhere else, actually. Uh, Please make sure you subscribe so that you watch the videos more than anything, so I can get paid and then I can use that to improve buy more equipment basically. So I'll have 24,100. I will times that by 8 and divide that by 12, and it'll give me my insurance that falls outside the financial year, which is 16,600. So I'm going to take that 16,600, subtract it from my insurance expense because it's not an expense for this year. We have not incurred, we are not yet covered for those 8 months. So basically, I just have to reduce my insurance expense, which is not here. Okay. I'll just have to reduce my insurance expense by that amount, which is 16,600. So insurance here will be reduced by that amount, which is 16,600. My actual insurance expense will be 18,300. That's 16,600. It represents a prepaid expense, and prepaid expenses are recorded in trade and other receivables. So I'm going to add it to the already recorded prepaid expense of 5,280. So add that 16,600, it'll give you 21,880. Now you will add that with this, all right? It'll give me my total trade and other receivables. I'm done with that. Okay. Yeah, that was it. Am I missing something? I just had to include transaction 14 to make it a little bit juicy. They're saying that 11,000 is outstanding in respect of water and electricity. That is what we call an accrued expense. I wanted to have some accrued expense in here. So I'm going to go to my water and electricity and include that 11,000 Rand, which will give me my total water and electricity of 83,000. Please note that accrued expense is recorded in trade and other payables. So that's why here we have accrued expense, which is 11,000 Rand. And that will be it with respect to trade and other payables. You just find your total and that is it. The next one will be the last transaction, which says that the following information relating to owner's equity was not recorded. So we've got owner contributed 270,772. That will be recorded in owner's equity note, which is note number 7. Note that for cash and cash equivalent, guys, I will have nothing, okay, because it was not given to me. So I'm going to have a balance at the beginning of the year, which is 342,228. Net profit for the year, I'll have to get that from my income statement. Since I'm done with my income statement, I'll just total everything up. So when you add these two, you will get your gross operating income, okay? And then you will add all your expenses. Okay, I'm missing advertising there. I'll just add them. So you add all your expenses and the total that you get, you put it right there as your operating expense in brackets. Now you will take what you have as gross operating income and minus what you have as your operating expenses. You will get what we call gross profit, which is this one here. And then you add income, you will get your profit before interest expense. Then you minus your interest expense, you will get profit before tax. Because of grade 10 and 11, I didn't include the income tax, okay? So basically, you're going to have your net profit of that much. That net profit is the one that you will record in your owner's equity as net profit for the year. Then you will add your contribution, which is 270. But because it's contribution, it increases your bank. But your bank is not positive, it's negative. So I'm going to go to my statement of financial position. And because it's money coming in, it will reduce my bank overdraft. See? If I had a positive bank balance, I was going to add it to my bank here. But because it's an overdraft, it'll reduce my bank overdraft. Last one, plus I'm hungry and want to go home. We've got the owner drawing. Well, the owner basically took cash drawings, a total of, I don't know why they say the owner drawing, a total amounting to 250,000 throughout the year for personal use. Okay. Hi, you see now getting things from past papers. Certain things just don't make sense at all. Let me just correct that quickly. Now it makes sense. Let me just record this quickly. So the owner withdrew 250. Remember, these transactions were not recorded. So drawings will be recorded and the owner's equity note. But I have to check. It was 250. Do we have any drawings in the statement in the pre-adjustment trial balance? That's what you need to check first. And drawings. There it is. It's 100,000 over there. Okay. So I'm going to add it with this 250 to get my total drawings for this year. And that'll be reducing our owner's equity. So 100,000 plus 250, this is where if you're grade 11 and 12, you just have to, so drawings is the same as dividends. So basically this is like your retained income if you're doing grade 12. And if you're doing grade 11, it's the same as your current account, okay? So your drawings here will reduce all of this. And that's why you're going to have 350,000 rand. So your balance for owner's equity will be that 342,228 plus 2,164,452 plus 270,772 minus 350,000. So balance at the end of the year will be 2,427,452. That's it. At the same time, that will increase my overdraft. If my bank balance was positive, it was going to reduce my bank balance. But here, it increases your overdraft. Okay, so any money going out increases your overdraft if you're already sitting with an overdraft. But if you have a positive bank balance, any money going out will reduce that positive bank balance, right? I just realized as I'm getting to the end, I keep on saying my bank overdraft was 7,800. Actually, it's 97,400. Keep on saying 7,800. It's 97,400. So that's why you always saw 97,400 here. You're probably asking yourself, where does 7,800? Please Note that it's 97,400. Okay. And that's it. And to complete this, I will start with my under capital and reserves. We have capital. If you're doing grade 11 and 12, it's current account. Grade 12 is shareholders' equity, where you have your ordinary share capital as well as your retained income. Okay. Now, when you add all of these up, you're going to include note number 9. If you had current portion of the loan, you will include it there, but you will include trade and other payables, which is note number 9. And that's what you will get. Now you will add your everything in bold. Your capital and reserves added with non-current liabilities, added with current liabilities, you will get your total equity and liability, which is 3,468,360. Okay. And coming to the assets part, which is your current and non-current, we had a fixed deposit. When you look at your pre-adjustment trial balance, you will notice that the fixed deposit was given to you as 360,000. So that's the one we're going to include as your financial assets. So when you go to your assets, you will add that to total non-current assets. And your total non-current assets will be 2,676,800, added with your inventory total and trade and other receivables total. Cash and cash equivalent will be 0. Your current assets will be that 791,560. So how did I get that? I just added everything here. I just added everything there. And that's how I got that. So now you're going to take that and add it with that to get your total assets, which will be 3,468,360. So your total assets is just your current assets plus your non-current assets, and that's it. And your total equity and liabilities is your non-current liabilities plus your current liabilities, add them with capital and reserves. These two amounts must always be the same, which actually confirms what we did when we did the analysis of transaction, that your assets will be equal to owner's equity plus your liabilities. Please note that under liabilities, we've got non-current liabilities. You add them with your current liabilities. Okay, so all of these will fall under your total liabilities. That is why here you have your equity. Your equity plus your total liabilities is equals to your total assets, which is divided between your non-current assets plus your current assets. Okay, plus your current assets. All right, that's it, guys. That is it. We have reached the end. Finally, I can now go home and relax in this cold, rainy weather. Okay. Hope you enjoyed it. Please don't forget to share this with your friends, like and subscribe, and watch it, guys. I'm left with 720 hours. Then I will get paid. Please make sure you watch until the end and share it with your friends, grade 10, 11, and 12. They will gain a lot. Thank you guys for your support. I really appreciate it. Enjoy the rest of your day. Kgotsong.